All right, ladies and gentlemen, I hope you're having a wonderful day. Man, I hope you're having It was a pleasantly surprising day in the markets because despite there being a downgrade on U.S. credit, the market found a way to close green on every major index except for the Russell. So everybody was talking, why is it up? Why is it down? But oh man, I got something bigger that we got to talk about because you guys remember that game of chicken that we talked about between Powell and the markets and Trump? Oh yeah, you're playing a game of chicken too, my friend. Oh, yeah, so I have tinfoil for you, and it relates to some of the things going on and some of the things beneath the surface, what we had today, and the general vibe that we are getting and probably going to get moving forward. So we got a lot to talk about. I have the plays, the keys, a lot of pretty pictures, and then, actually, I got something big for you. We got to talk about Biotech. I actually have something huge for you on that, and then we got a lot of plays. You're gonna see here. It's gonna be a good one. So my recap, people, lock in. You're gonna have to bear with me for a second, but Chatadonia, how we living, baby? What's going on? Good evening. What up, Apple? What up, James? Mr. Kakamo, Zoraz, Noin, Brian, Bost. Oh, what's going on, Jacobin? How you doing, Mr. Leach? Ice Mocha, Samuel, Tim Whitman in the house, baby. What up? Oh, good day start. Jonathan Damron, The Culture, Edwin. What up, Marshmallow? What up, Edwin? How you doing, Gene, Renee, Dev the Lurker, dude, El Trapato, JG, Devin the Dude. What's going on, baby? How you doing, Carson Bowl? What up, Brian Fierros? What up, Ivy? What up, Jay Esco? What up, Listo? What up, Santi and Marcus Bryant? Good evening. Me, not you. Cosmo. Oh, my gosh. It's Chad. You guys go in quick. What up, Usha? What up, Jay? What up, Will? Oh, Adam. What about the Twitch? Oh, JJ and Oddity and Ryan and Stock Sasquatch. How are you? Good evening. Good evening, One Wolf Pack. Blazing Bob. Oddity. Oh, Mr. Wavy Bone. JJ. PhD. Oh, the Twitch. You guys turned up. What's going on, man? So I hope you guys are doing good. I hope your evening is good. I don't know what. I'll get to the pretty pictures after I get to the tinfoil. Okay, so if I missed you, I still love you, and I hope you're having a good evening. But let's talk about it, man. You realize, do you see the market? Do you see that we closed green? I hope you see that, and you got some China data coming out now, too. But let's talk about it. The vibe, man. The vibe. Did you feel it today? Uncomfortable and frustrating. That is the word on the street. After these last couple of weeks, after all of the individual moves you've seen, after a credit downgrade, after a weird rally, and then going back up, and now everyone's like, it's supposed to die. No, it's going up. It's supposed to die. It's going up. So, yeah, I think China just lowered rates, too. We had a rumor of that today. I think that's happening now. So, look at that. Well, the whole point is, with everything, there's a lot going on, but this is how some people are defining everything that we've been through, uncomfortable and frustrating. This is what people on Wall Street are talking about, and it kind of defines what we've gone through. Even after today, I'm pretty sure in the last 14 years, this is the first time you have had a green day after a credit downgrade. So I'm just going to tell you now, and this leads to the tinfoil, and it leads to what's going on. I was telling you this last week. What was one of the major themes of last week? I wish we had a quiz. You know that? I really wish we did. But what was a major theme that we had last week? Does anybody? I'll give you $1, $5, $10, $20. I'll give you beef jerky. Not abolish the Fed. We weren't trying to abolish the Fed. It's not CHOP, but that's a good answer. What is it? What is it? Not certainty. That's a good thing to keep in mind. Ah, there it is. Amir. Habibi. The positioning. So when it was all said and done, yeah, you were getting a lot of info, the tariffs and all of that, but the positioning was still low. People were still underperforming and underpositioned. It's not as if this rally had everybody get on board. So I'm just going to tell you the tinfoil right now, Chattadonia. Are you ready? Are you ready for this evening of tinfoil? Forgive me for putting tinfoil on the watch list. I usually don't, but I have no other way to get the point across. And quite simply, Wall Street is really behind right now. Okay? And I believe that they will do anything to get you to sell. Okay? There are real concerns, and I think we've been addressing them. And if you've been following along with the trade deals and everything else, I think you could see it. But they are really underpositioned. We talked about that last week. We even talked about this at the beginning of the year. Wall Street was the first cohort of people to sell off. So maybe they benefited off of it until we hit all-time highs. And then we came down again, and now we are climbing back up. But point is, from December and pretty much since Donald Trump won the election, Wall Street has been underpositioned. And the bond market is separate. I'll tell you guys that right now. That's why stocks have gone one way, bonds have gone another way. Although I do think Wall Street kind of hopes that bonds get clapped more and stocks do because they are underpositioned. And now, like I told you, on Wall Street, one of the worst things, I'm telling you, it's almost been 6 months. Give it a couple more months, you could have had a baby. One of the worst things is to go by the end of the year and Wall Street has to explain. Do you not realize this is how GameStop started? Wall Street hates having to explain how they underperformed a bunch of kids. That's it. That's just the reality, and nobody likes that. So that's why underpositioning, that's why we have such dynamics of FOMO and chasing and craziness in the environments that we're in. So when it's all said and done, they are underpositioned. And this is the way I'm looking at it. And I'll show you guys the evidence. As I've been showing you, there's a lot of stuff we've documented, and there's a lot more. And I'm not the only one noticing this. I'm getting this data from other sources, you know? So it's like this exists. People are talking about this, and you could see it. That's the irony of all of it. But the bond market is separate. Keep that in mind. And I do think there is a group of people that, this is why I'm saying it sounds so tinfoily, but I think it's true. They benefit off of higher yields, the bond market getting clapped, whether it's vigilantes and disagreement, or, like I'm saying, Wall Street and people that are under position, they would benefit off of stocks going down. But I'm just telling you, underneath the surface, retail demand is insane. You're still watching people line up to buy. And even a day like today, after a downgrade, the buybacks and a lot of things are there. Now, listen, the part that sucks about all of this is I have to explain this, and I'm not as confident as it sounds like I'm telling you. Do you guys get the dynamic that's going on here? That's why it's like I'm not trying to talk you over the edge of FOMO. It's just that Wall Street is very underpositioned. So does that mean you should overposition? I don't know about that. That's not how I feel. So at the end of the day, though, I think this is a good way to sum it up. If you guys haven't realized, and think about it, you're living in the midst of it. You just got a historical downgrade on U.S. credit. Well, here's what I will tell you. Whatever the forces at be, I don't give a shit. But I don't care who it is, how it is, call it whatever you want. But I'm going to go out and take a swing. The bond market is saying that it either wants a Liz Truss moment or everything is going to go back to normal and things are going to rip and everybody's going to have to get on board, because by then they will be heavily underperforming, and the hard data and everything, if nothing goes wrong with employment, the economy, inflation, all that, then really what do you have to worry about? But I hope this makes sense, because with everything going on, I mean, again, look at the bonds, look at the downgrade, you know, the fact that everybody is like, because again, today was kind of symbolic, the downgrade, and the fact that it was big and such a big deal, and you had such a minimal reaction, and everybody went back to this chasing and all this stuff beneath the surface, I think it really says a lot. But like I'm saying, this isn't a market that you could get certainty in, and then meanwhile, the bond market is knocking at these danger zones and all this is happening, and then you're talking about the deficit and all these things going wrong. And really, just simply, I think the bond market is responding to the debt and the proposal, and I think some people want there to be a Liz Truss moment where the bond market forces the government to backpedal, or it blows up and goes absolutely insane. So I hope that one makes sense, because that's one part of it. Other than that, Wall Street is heavily underpositioned. So before I get to the final key, let me just show you guys the evidence. So here's the first one, and this is just the performance. So beyond just the other stuff that I showed you, if you look at macro funds and long and short funds, you could almost, and even I think systematics, yeah, even like computers, bro, you could break down almost any sort of strategy on a big money Wall Street level. They are all underperforming or underpositioned. So computers are underpositioned compared to literally just discretionary investors. That is people like retail. And then long and short funds, and then even macro funds, their weekly returns, they are literally in the negative. So there are strategies in Wall Street. You got to think about it. Your long term is up, bro. But do you realize people sold out? So some people on Wall Street, they sold the top pretty good, but then it went down and they're like cheering, and then they still didn't buy back, and then it goes up. And then some people shorted. So this is some of the factors going on. I think there's one more, and then here's just one of the final ones. And we're going to talk about a bigger factor, but this is the thing on the back end. So do you realize you have one of the biggest amount of buybacks that have been announced coming into the beginning of the year, from now until January? Like literally one of the largest amounts of buybacks on record. And you haven't executed all of them, but you do have actual buybacks getting executed at a very high rate right now. But again, underneath the surface, we're out of the buyback window. This is taking place. Everybody's chasing the rally. You're people being optimistic on a China deal after just being very pessimistic. And like I'm saying, even if they're like downgrade, people are brushing this off, and now there is a wide gap. Remember, like we talked about the demand at the beginning of the year, and I really think it's kind of Wall Street versus retail. And over the next few months, it's either Wall Street is going to get everybody to capitulate and panic, or everything is going to get a lot better. Or again, maybe I'll add a third option. You just chop around, and then the market makers take their money, aka Wall Street, while everybody waits another 3 to 6 months. But then again, you haven't got that in the Trump market, and I think that's what a lot of people were banking on. That they're like, yeah, maybe we could wait it out, but literally every other week something massive is changing, down to Trump and deals and policy, down to the credit agency. So we'll see where it all plays out, but I think this is going to be an interesting dynamic, and like I'm saying, it's everybody's talking about it. This is uncomfortable. It's an uncomfortable rally, and people feel a certain type of way. It's frustrating to some degrees. I mean, if you got a long term, you love it. But when it's all said and done, I don't think we're out of the woods. And like I have been telling you, this is why. Don't get caught up with words. Don't get caught up. Again, give yourself time in like a bear market rally and some of the stuff we went through. But head on a swivel. Only thing that's going to kill you is certainty. So, amen. I hope you feel me on that, and we'll see what happens from Liz Truss or retail or the hedge funds. We'll see who wins, but that is key number 2 and your twin. And now for the rest of the week, not much data. It might be an uncomfortable week, so it might be uncomfortable in terms of stop and go. And we kind of saw it today. I was kind of mad because there was some plays that I took on the staple side. I really thought they were going to do good considering there was a sell-off and they were holding up. But I thought they could do good in either environment. But the premiums didn't really move and the market was kind of slow. But then I still hit another core weave. And there was a couple of plays out there, but it was very stop and go. And even now, we thought, and think about it, we haven't really gotten our political trade-driven headline for the week. We thought it was going to be about the EU. Then now we had this credit downgrade. Everyone's kind of brushing it off, or maybe for now, we'll see, but we still don't kind of know the theme. So get ready for stop and go. And again, velocity. And I think that's a huge part about today. That's one thing I didn't like about today. And here's the deal. Like when I'm saying like today was either nothing or we haven't seen shit yet. Does that make sense? Why? There's something major about today, actually. when it's all said and done. It was major when you look at how today really played out. Let's see. Do, 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 do. Here. Please. Can I? Thank you. Yeah, long time. Long time. And say 10%. Yeah. 10%, 10%, 10%, 10%. And the answer to your daily double is, what is panic? So despite there being a major event, literally, you had Moody's first move of the credit rating on the United States since 1917, there wasn't panic. No, think about it. Look at today. It didn't trade like panic. Even to the upside, it was you made most of the move in 30 minutes, and the volatility was kind of chill. So I don't know if that means we're going to get the panic later, or again, this truly was a lagging event and everybody is more focused with catching up, or maybe we don't catch up and everything sells off and then the bond market and everybody trips out and then we have a Liz Truss moment. But either way, I think that's a very important one in this week. You don't really have the theme just yet besides this stuff. There's not going to be that much data. There will be little data sets, but I think individual stuff will be very important. So other than that, we'll see this back and forth and stop and go and comfortable rally or not. There is a ton of Fed speakers, so that'll be it, but I don't give them any credence anymore. I don't think they run the show as much as Powell does, but we'll see. And I think now leading into the plays, you might get a lot of individuals. So that being said, let us get into the plays. So, Chad, are you ready for today's plays? I have a lot for you. We're not done. Good evening. We're not done. We're not even finished. We're not even close to finished, Josh. I'll tell you, we're going to build back better with a big, beautiful bill with the big baller brand. I'm telling you, you're going to love this one. You guys you're going to love it, but I'll tell you, none of this is a recommendation. Options and stacks is extremely risky. You can lose all your money, all of it. They'll take all of it, I tell you. They're wicked people. They'll take it all. It's not a recommendation. Josh is a little Egyptian boy. Little Egypt. I'm telling you, little Egypt boy. Cute looking guy. Looks like a little lizard. I'll tell you. But he's not the financial advisor. That's what he's not. He might be a camel, but not a financial advisor. No, not at all. That being said, half of you will lose all your money chasing these plays like a jackass. You're going to say, wow, that's cheap. It's not. It's not cheap. I tell you, it's not. Anyways, here it is. Play number 1. Pharma. So, my friends, there's a lot going on in the next couple of days. So, there's 2 parts that we got to juggle. There's a set of catalysts that I'm going to go over with you, but I talked about it yesterday. A lot of people on Wall Street are now, I have a couple more models, they're talking about the valuations on pharma. It's actually kind of insane. I'm telling you, we were talking, do you guys, let me put it this way. Do you remember the last time I talked to you about dirt cheap valuations? Do you know what it was? Do you have any idea? It's already ready to go. The last time I told you about dirt cheap China. Well, there it is with the daily double. China. Amir pays attention. I love it. China. Yes. So the last time, there's a lot of uncertainty, but when it's all said and done, if you want to look at historical valuation, China. And this time, it's pharma, biotechs. they are literally at one of their cheapest valuations, relatively speaking. U.S. down to European biotechs, they are absolutely getting clapped. So here's a little chart. This one is from Goldman Sachs. And as you saw there, there's an event tomorrow. Did you guys know that? So tomorrow, there is a Goldman Sachs pharma conference, and there's going to be a lot of random announcements, and you probably noticed a lot of random medical plays moving today. But this chart right here, it's showing you from like 1990, this is showing you the S&P 500 versus pharma, and then they excluded Eli Lilly. You know why they excluded Eli Lilly? Because Eli Lilly went crazy because of Ozempic. So to give you a better look, you could kind of see how it's performed, but now as of late, you literally have pharma getting absolutely clapped. Again, relatively speaking, its valuation is nuts. And again, all of these, you have Hillary, the Medicare Modernization, Affordable Care Act, and then all of the little stuff going on. Oh, you got The Wire. My bad. But yeah, the whole point is that, like, historically, you are getting, healthcare stocks and even biotech, specifically biotech drugs, they are at one of their lowest valuations ever. Now, there's a lot of uncertainty, especially with Trump and everything going on. That is why. So this could last for a short amount of time. This could last for a long amount of time. That is your risk reward. You could buy in uncertainty, you get it out the way, things get better. You're going to get paid hefty on medical, you know what I'm saying? It's a really good industry, and there you go. You're good, but if not, it could go down substantially, or it could take another year, 2 years, 3 years, 4 years to recover, and then now you just burned your capital while everything else is ripping. So do you guys understand the risk to reward? So I'd keep an eye out for this. I wanted to put you guys onto this because this might be an area, and you have to understand, because a lot of people are bringing up XLV and a lot of other names. We just bought NVO. This is how you're going to look at it. I mean, you just really got to decide if you want to take a nibble or if you want to take the risk and understand what names you're buying and the types of drugs you're getting into, like biotech drugs, because certain industries and brands, they're going to offer, a different type of investment. So I would think about that, but if you got to be ready for the risk, reward, and the timing. It could take a while or it could be short. So either way, I'm going to keep my eyes out for it. Maybe there might be some diamonds, or maybe not, or maybe we watch this for another year. Because again, when I told you that about China, it still took another year and a half to materialize. So keep that in mind. But that's the first one. Wait, I think I got one more biotech. Oh, no, I don't. I thought I had one more biotech chart for you. But other than that now, let's talk about this week. Actually, the next couple of days, there's going to be a bunch of events for biotechs. Did you guys know that? So tomorrow, you got the Goldman Pharma Conference. There'll be random announcements. You might get random news pops on medicine plays tomorrow. It'll probably be because of this. We'll see what they announce and price targets and all of that. And then tomorrow and the next day, FDA Oncology Committee. This is huge because they're going to be announcing approvals and pretty much give insight into some of the cancer drugs from Johnson & Johnson and Pfizer. So this is big, and even Johnson & Johnson, it triggered on one of my other scanners there that I'm going to show you here. And also Johnson & Johnson has another thing about a cancer drug this week, but this is going to be big. Anything related to cancer drugs, I think is it on the list? Summit, SMMT? That was also brought up, but keep that in mind. That's going to be, again, tomorrow and the next day. And then, Wednesday or Thursday? You have another committee on COVID vaccine framework. If you guys saw, I think, Myrna today and NVAX, you got updates, and even last week. So that could move it around. I don't like playing those, but that's going to be a big update. And then the May 22nd is the last day for the FDA, if they're going to take any action on any of the compounders, the drug compounders, for the semaglutides. So that one could be big, and that could be related to Hims, Eli Lilly, and NVO. So watch out for that. And then finally, again, even May 22nd, you're going to get some other reports from other, again, cancer makers, AbbVie, Bristol Myers, J&J, Merck, Eli Lilly, and Pfizer. They're all pretty much going to have some updates and information related to pretty big blockbuster cancer drugs that could change some things. So you probably noticed those names moving today. I think this is why, and for the next couple of days, you'll see this, and it's either a lot of eyes will be on it and nothing happens, or maybe this one just flew under the radar, and if anything does happen, be ready for it, my friends. So other than that, that is play number 1, and now are you ready for number 2? So this one, approach with your own caution, but I noticed a couple of different things, and last month was crazy, right? Last month was absolutely batshit. So I have this little scanner I've been playing with, and I noticed something on volume. So I've been playing with it, but long story short, all of these companies right here, I'll show you a little picture after this, but and again, it makes sense, even, is Merck on there? I think Abbott, now MDT, like a lot of the medical companies, they're on here, but UNH, J&J, Home Depot, Lowe's, Esso, Charter, Oracle, Pepsi, JP Morgan, Target, Abbott, NEE, now MDT, Capital One, FedEx, Morgan Stanley, and UPS, they're all trading substantially above their 30-day volumes already. Halfway through the month, they've already traded, like UNH is the crazy one with everything going on. This thing has already traded like 300% volume. And I've noticed it because this little thing I've been playing with is like a little algo, but the last couple of days on Core Weave and some of the other momentum plays, I've been throwing that up there, and it's kind of, if it's pretty much, if the volume has been outpacing extremely early, just long story short, there's a lot of people under position and chasing right now. It's been a good indicator, barring, nothing, gets in the way. But other than that, these ones showed up, and I thought it was interesting. So keep your eyes on these. I have a couple plays. I did a play on J&J today as just a staple, but those plays actually lagged. Did I make an MDT play? I played one of those. I wanted to play one of the medical ones. But other than that, here's the picture. But yeah, this is what I'm talking about. So look. UNH has traded 355% of its 30-day volume. J&J, again, like I'm telling you, this one has been like a staple and outperformer, but like straight up, even this week with the cancer stuff, it's already trading 140% of its monthly volume. And then this one, I have no idea why they're going up. I think it's related to China and trade. Maybe you guys have an answer, but Home Depot and Lowe's, they're trading almost equivalent. And then you'll notice the names that are doing it, these are names we like, and these are names that are heavily down on the year. And that's something I'll tell you is that as everybody's chasing, they're not chasing small caps. They're going after quality. So even then, like, take a look. UNH is down. It was just down 50%. It's quality. It's going through uncertainty. I don't know. Maybe this one has an asterisk above it. But Pepsi, we've been talking about that, down 27% on the year. Target down 38% on the year. Nextera down 2.9 if you want energy utilities. FedEx down 12, UPS down 33. So these are names that should sound familiar. Oh, HD earnings tomorrow. Well, there you go. That's probably the reason why then. But so keep this in mind. See how any of these play out. But I definitely think Johnson & Johnson, UNH with everything going on. We called out a play today. I was too scared to take it because we flipped it on Friday and the plays just kept going. But other than that, we'll do some volume stuff in the morning, or maybe if you guys have any plays, tell me about them in the morning. Come in the AM and let me know, and I could put it in the scanner, and then we could see what happens. But other than that, Chattadonia, that is your watch list for the evening, and I will remain here for a few. If you have any questions, comments, if you have any concerns, please send it to our email at nobodygivesaf@gmail.tradingfraternity.com, and make sure you attach your Ethereum postage stamp. Other than that, you let me know what you need. Pizza. Core Weave. I hit another one. I'm a degenerate, man. I feel guilty hitting Core Weave so many times. I hate it because I'm like, it's too expensive, and then it gets cheap, and then I watch the options lag, and I'm like, okay, and then it trades all of its volume in 1 fucking hour. It did it again today. That's why, man. So it was crazy. So that was good, man. The news on Core Weave, nothing. They got touted by Barron's, and then they were kind of mentioned at like this NVIDIA conference thing today. And then it broke out. I was only playing it because it broke out IPO. I've done that shit my whole life. Go even on the stream alert. Dude, I still have it. I have plays that I bought for 40 cents. They're trading for $1,000 a pop, and I think they went in the money after the bell. So I just played it off the IPO. I played my OG strategy, and it broke out. I like Baidu a lot. They have earnings, so we'll see. And then even today, that little political news I told you guys about with like Apple and Alibaba, it got confirmed, but it was kind of bad news. But yeah, that they are still working on that. So later, good evening. Good evening. How are you? But yes, is there any other questions, comments, concerns? I like Pepsi a lot for the long term. Dude, do you guys know the long term went up today? I mean, the market did go up, but yeah, I'm shocked. And I can't believe it. We're halfway done with the month. Bro, we're going to have another deposit. But then again, like, I'm liking Biotech, but I'm also like hella patient. Because if we wait a little bit and could really sniff out some good value in healthcare maybe, and let some of the dust settle, that'll be awesome. Go get dinner. I know I need to eat. But yeah, man, look, the long term, bro, 249,650. And we talked about it today. I showed you guys a little tax trick that we're going to do if we need to do it. Pepsi paid $2 billion for Poppy. It's a lot of money, but people like Poppy. I think it might be decent. Celsius, but then again, like Alani Nu, that was like $1 billion, so I don't know. But Poppy, I feel like, has more exposure. But Pepsi's a good name. I mean, again, I do think Coca-Cola's there. The trick is it's the reason why we hold and why we wait to sell for a property. So I'll just show you guys the simple trick. I showed it here today. If you guys want, why not? I'll put it on there. This is a premium plus subscriber, but you guys are going to see it. It blows everybody's mind. So this is why you hold, and this is why you got to think about planning. And I always told you guys, sell strategically. And, you know, you sell with a plan of what you're going to buy, and that's why a house is the goal. And, you know, we've held stuff and we hold it for 10 years minimum. So I gave an example because I'm like, yeah, if I wanted to sell, I was telling you, if I find a good house, I'm going to sell. I'm going to show you guys. And I think you guys need to see a real life example. I'm going to turn this long term into a house, and I'm going to sell it, and I'm going to buy a house with it. And you're going to watch it go down. You're going to watch me sell, pull out the money, and I'm going to put it in a house. And then we're going to have to go back to saving and building it up. And so I was going to show everybody how to go about selling things and which ones. And we always said start with the losers, but you could start with the losers, and there's a way to do it in a smart way with taxes. So I've explained this many times on the channel in many ways. This is why, unfortunately, I had to sell Palantir stock, because the year where Palantir was down, I made a lot of money trading. So I was down on the equity. I was like, let me sell it and I'll buy back in. And I harvested the loss, but then it ripped and then I never bought back in, and then I cried. But long story short, here's the example. Snapchat, right? So if I sell out of Snapchat, I could get $5,800 right now in equity. If I sold out at this price, I would get $5,800 back. And then I would take on the shares, not counting covered calls, I would take a $6,500 loss. Are you following with me? So now on paper, my loss is $6,500. And then I said, hypothetically speaking, I sold MO as well. Altria, right? And I'm up 6,800 on Altria. So if I sold out Altria right now, I would get back $26,200 in equity, and then I would have a gain of 6,800, right? So what just happened? But if I did those two trades, that would bring in about like $31,000, $32,000. So if I needed that for a down payment. But yes, it would offset. So we wrote it down. You would get back your money, but since there was a 5.8 thousand loss or 6,000 and then 6,000 gain, it was like a taxable gain of $200. So then that way, what I was saying is you could go through all of this stuff that you're holding, and then depending on how much capital you need for what you need to do on the purchase, you could hold and sell strategically to lower your taxable burden, and then you could still have the cash. So in that case, if I did those 2 transactions, I could pull out $30,000 with only $200 taxable gain. And then that way, any of the losses or other stuff that we've had, you could now use it more strategically to your advantage when you're ready to move it to the next bigger one. Ta-da! So yeah, that's the little trick. But that way, I was going to show you. So hopefully we find a good property. And if I do, you'll watch, and depending on how much capital I need, I'm going to go through. And that's why now, like even some of these, if we need to sell the big gainers, Meta, Uber, it'll be tax-free because I'm going to sell it alongside some of the big losers if I need that capital as well. And then that way, you could wait a couple months, and then we'll rebuild the long term, and there you go. Go from there. Ta-da! Thank you. So there you go. Any other questions? But yeah, that was the little one today. But shout out to long term, bro. And again, all the long terms, man. Can I give you guys a little rant? I could give you a little rant right now. Would you like a little rant? This one's always a healthy one. I had good reviews on this rant. Wow, it's still this one too, man. But Cult Sister. How you know that? Fans rave. Critics from all over say this inspired them. You know that? They said that this inspired them. They said this was enough to get them on the long term. You know, it has a 10 out of 10 Rotten Tomatoes. So, yes, it's up 18 on the year, but that doesn't matter. That's a great blessing. And this account doesn't even have Meta. Think about that for a second. So this account missed out on Meta. It quit. It has half of the time as the other accounts. It started at all-time highs, and it missed out. And then are you ready for the kicker? This account never raised its deposit. Habibi. Chad, do you get it? You need this. All of you need this as a life jacket at minimum. How does my liberal sister have this and you don't? All you got to do is $200 a month. And you put it in there and you grow it. That's it. And it will at least give you an account that'll go up. And in a couple of years, it'll just turn into a down payment. That's it. I think 3 years max. And then I think she stopped depositing for a couple of months. So it was just no more than $2,400 a year. Some of you spent more than that on an option. No? You don't think? I think, has anybody in here, like, think about it. I don't want to call anybody out, but I think some of you have spent more than $2,400 in a year on an option. And like options trading, no? So this is what I'm saying. You give it to this account first. You see what I'm saying? You put it in an account for you. You get what's crazy? I'm not telling you to give me the money. I'm telling you to give this to you. I'm telling you to put this aside for you first. So just do that and then do whatever you want. But I do think all of you got to do this. And like I'm saying, in a couple of years, I think this will at least give you guys, some of you, a lot more confidence. Will leave you with the good savings, and God willing, it should be a down payment. And if you have a job, even easier, bro. Even easier. So yeah, that's how it is, man. That's good. Do I have other accounts? I do have other accounts on the YouTube, besides the YouTube. Yes. I made these YouTubes because when I would talk about it, people would ask me all the time. So I said, watch, it's not too late. Because I just sit there and rake it in. So you guys see it now? All you do, you buy some good stuff, and then when you find a house, you sell it. And then you buy the house, and then you rinse and repeat. Throw in some Bitcoins and all that. And play your time, and little by little, and stack it up. So yeah, that's kind of even the origin story of the YouTube accounts, the lore. Because again, that's Cold Sister. I can't believe it's made all of those those changes, all of the growth. Let me see. I want to log into the small one. I'm proud of it, you know? Very proud of it. Yosh changed their life. That's good, man. You got people saying get a long term. They don't know what you're talking about, but that's all I could tell them. I feel you. Tell them safe. I tell people on 2K in any video game, I tell them get a long term. See? But man, this is amazing. But it's going to turn into a house. Have I built any apartments or luxury houses? No, man. What do I look like? What do I look like? No. I want to build like maybe a hotel one day, but they're all money pits if you don't know what you're doing. And I don't know what I'm doing. I stick to what I know. I like residential. I like simple rentals in good areas. Airbnbs, it's funny. I think Airbnb is still in short-term renting. It's a little bit of a hassle, but man, if you get some good deals at the right price, oh, those are great. But other than that, no, I've not built any luxury or apartments. Trying to buy the one you're in now. The apartment, that's good. Baba kind of moving. I think there was a rate cut in China as we began this video. I don't know if it loads up on E-Trade. It does on TD Ameritrade. TD Ameritrade. TD Ameritrade. Berber. Oh, look at Berber. Oh, Chinese rate cut. Berber down. Berber up. Yeah. Is that why futures are down? I think futures might be down because everyone's mad. But yeah, futures are down a quarter. It does kind of correlate, but it was around when we started. Other than that, though, I do think this week is going to be kind of dictated by vibes. Again, whatever stop and go headlines we get, policy, all that good stuff. What does Moody's think of China? Canada is better rated by Moody's than the United States, I believe. So yeah, Honda long term. I like Honda as a company. My whole life I've liked Honda, but they're not really autos aren't really in the best spot right now. So I think you could either get a better return on your cash for now, or I would go for Pepsi, UPS. I'd rather go for a more American behemoth at like a 5-10 year low right now than Honda. Otherwise, if all else fails and you can't get a good deal on something good, then maybe Honda or Toyota. But I don't know. Autos are good, but like I buy a lot of cars, but like I don't really buy cars a lot. Like a car is it's a car. It's a purchase everybody has, but it's a little different, and it doesn't have the same like growth and scale as some other companies and brands. So yeah, but it's a great brand. And the financing, Toyota and Honda are really just banks. That's where the real money's at. It's the financing arms. Well, New Jersey's real estate is just crazy right now because of inventory. So New Jersey is one of the places in America from the beginning of the year till now. Prices are skyrocketing still, regardless of anything going on, just because inventory is so low. Yeah, Pepsi owns a ton of shit. That's why I like Pepsi. It's funny because I remember Pepsi and Coca-Cola were neck and neck. And I remember everybody used to go on and on about Pepsi of this, Pepsi of that. Oh, Pepsi, Coca-Cola, Pepsi. I'm like, shut up. But now I don't know where they all went. They disappeared. But now I like Pepsi. So what does Pepsi have? They have Fritos, cereals, rice. They have Quaker Chewy, Cap'n Crunch, Rice-A-Roni. What the fuck? They own Rice-A-Roni? Finish syrups, Pepsi, Gatorade, Mountain Dew, Aquafina, Diet Mountain Dew, Sierra Mist and Mug, Latam. What else? They got shit in Australia. Yeah, bro. They got a lot. They got a lot of good shit. Good brand, habibi. Many, many things, man. Yeah, Coca-Cola. Well, that's the thing. I don't know. It sucks because I think Pepsi is like the cheap Coca-Cola alternative in the market, but they're like very similar but very different. But yeah, I don't know. That's the risk. You're buying the one losing market share. That's why they're going down. It's all recent. I don't know. I really like Pepsi though. But then again, go look at UPS. That thing's kind of been basing out now, still below 100. That shipping, again, the stop and go with shipping is going to be nice. Who else was there? Target's still down 38. BB, so many, and the NVO still down something. Pepsi like a Reebok? No. Bibsy Cola, Dr. Bibsy. You know, all of the Bibsy. I like a Bibsy long term. But long term is key. Banks? Nah, the banks are really up there. There's a couple, like, small regional ones, but I wouldn't touch any of them. You know, like, KRE is still relatively cheap when you look at it compared to, like, XLF. But, like, actually, who was it? Citi was the value bank, but, and, you know, they're not past 2021. You know, actually, let me see Bank of America, too. I think after Buffett, but even Bank of America, if you really wanted, the only problem I hate with the banks is that they were just extremely cheap in 2023. And you had to go through all that bullshit. And then, even then, they were just a little bit cheaper not a couple weeks ago. But, yeah. Like, do you see what I'm saying? Like, Bank of America, that's below 20-year highs. Citi is still murdered if you really zoom out. Morgan Stanley just recently broke out, so that one's a no-go. JP Morgan, we bought it on the fucking low, so we got the good price and the breakout. That's why I was like, if you could get JP Morgan, if that ever crashes, just scoop that up and call it a day. Who else is there? Wells Fargo broke out, I think. Yeah, you see? Wells Fargo broke out of their range. So really, it's Bank of America, Citi. Yeah, Bank of America and Citi. But I think Bank of America is probably your best one. But Warren Buffett kept dipping out of them. So, yeah. Those are your only... but then again, they still have short-term premium. I wouldn't really even put those up on my number one on my list. Hard data. I think hard data has to come in positive consecutively. Because then even if it's good, they're going to say, wait till the next one. And even though we've done that for like 6 to 8 months already. So it has to kind of be undeniable. And then at that point, you'll slowly be choppily in a weird way, you know, working your way up. The 90-day pause is going to fly by. I think it's almost been 30 days, so we're getting there. You didn't spend this month's deposit yet? Same, bro. Same. I'm chilling, bro. Stacking that capital. All right, Chad. On that note, I'm going to eat my vitamins. I'll scout one more question, but I think that's it. I think it's game time. Are you ready? And I'm not going to give you a philo on this, okay? But can I remind you? My brother, this moment right now, being present, and tomorrow when you wake up, you should expect good things, okay? Because you only get your moment and you need to embrace it. Stop waiting for perfection. Okay, take the joy now. Okay, why are you withholding joy from yourself? It's a choice. You could enjoy things without it being perfect. Enjoy the imperfection, my brother, okay? That's it. Lock in. Enjoy the present and take advantage of this moment. You own it. The only thing you truly own is right now. So, wow. Amen. Have a good night's rest, okay? You sleep good. You are so blessed. Especially, you got a long term. But expect something good, okay? Good. Wake up. Oh, something good's gonna happen. Oh! So, Chad, I love you all. Finger to the sky, baby. To God be the glory. Enjoy your evening. And peace out. Harda!